just pull up BMW Industries as well, because that's a stock that's been in focus over the last week after the company announced its capex as well. Let's also pull up a longer term chart for BMW Industries as well, because as a stock, it's been in focus because the company has commissioned capex of about 803 crores, and they will be establishing a new Greenfield steel complex as well. And we are now joined by the management of the company, Mr. Harsh Bansal, the managing director of BMW Industries. Mr. Bansal, good afternoon, sir, and thanks so much for joining us today. I just wanted to start off with, the capex question as a whole, because it's a sizable capex in context of the company's revenue that it did last year. If you could just talk us through the rationale behind the capex and how will the same be funded in this particular cycle?
Thank you, Puneet. An absolute pleasure being here. So just to quickly recap, currently our business is primarily related to outsourced manufacturing. The capex that we are talking about today is in Bokaro. We intend to spend something in the range of about 810 odd crores. The debt equity mix is about 500, 550 of debt and balances through internal accruals and cash flow of the company. And the products, like you've rightly, you're showing over there, we intend to have a cold rolling mill complex with galvanizing and some new products that we are working on, for example, ZAM, and of course, color coated steel.
Got it. Hi, sir. This is Varsha this side. Just wanted to know, how will the numbers look like? So one is when this capex will be online, the capacity utilization that you are aiming to, and how much of top line will be added through this capex. If you can give us a ballpark number, and by when?
So the commissioning will start to happen. I think the first products we intend to start getting into the market before the end of FY26. And just to put this in relation, today our top line is by virtue of the services that we do. So there is no actual cost of steel that comes into our top line. Post this project getting online, we hope to achieve a stable state top line of maybe about 3,000 odd crores, but that will be in about 24 odd months.
Mr. Bansal, if you could just comment on the funding of this. You mentioned in your press release that it's going to be funded by internal accruals. I'm guessing there will be cash flow, but some amount of debt will be required for it. Any kind of quantification that you can give us?
So roughly about 500 odd crores of debt.
500 odd crores of debt, okay. And I just want to understand, on the capex spending as well. Apart from this, is there any other capex that's going into FY26 for you?
So we continue to have small capexes relating to our existing businesses, and these are part of stabilizing, upgrading, maintenance capexes.
Got it. And Mr. Bansal, you just said that you are expecting a 3,000 crores of top line in the next 2 years. Just wanted to have your view when it comes to margins, because I assume that you are going into, or rather you are manufacturing more of pipes and tubes. So I'm assuming this is a high margin product. So any comment that you can give on margin side, where can your margins go?
So again, relating to the businesses that we do today and what we are doing capexing on for the future, the margin profile will be slightly different. Today we are a service business where we do not buy any raw materials. Tomorrow for the new capex, that's a fundamental change where we'll be buying and selling steel along with the products that we service. So there will be a substantial margin difference in the two sides.
Mr. Bansal, you currently did about 600 odd crores of revenue last year. Now you mentioned that this does not include the cost of the steel in the revenue side. So going forward, will that change happen? Because you're mentioning that you're going to go to 3,000 crores in revenue in 2 years. So it's roughly 5x from the current levels.
Yes.
And margins, like you mentioned, it's going to be a different product profile. But would it be safe to say that the blended margins would come between 18 to 20 odd % for at least the next couple of years?
So if you're talking about net numbers, the net numbers will be in the range of about 10 to 11%. Okay. The EBITDA numbers will be closer to the numbers that you mentioned.
And just, in terms of the safeguard duty, we have seen a potential, government bodies have mentioned that a 12% safeguard duty in terms of imports of steel would be something that the industry wanted at least about 80 to 20%. But any kind of comment that you have on the same?
Puneet, thank you, but I don't think I'm qualified to comment on that, but it's most welcome nonetheless.
Got it. Mr. Bansal, in your last con call, you had said that rather you had given a guidance of almost 15 to 18% growth for the full year. But Q3 did not go as per your expectation. It was a bit lower. What it was expected. So, are you still sticking to the guidance of achieving 15 to 18% growth? I mean, how?
No, I think
Yeah,
I
please go
think we
ahead.
also mentioned that we will not be meeting that guidance, and the full year guidance we will be coming out with along with the March numbers.
Okay,
But
so
I think, yeah.
So does it mean that Q4 will also be weak, um, um, uh, like Q3?
No, I think Q4 we are on track, but we won't be able to make up the negatives of Q3.
Got that, Mr. Bansal. Thanks so much for joining us today and giving us a low view of course, the big capex about that, and many congratulations for the same. We look forward to our next conversation. But thank you so much for joining us today, Mr.
Thank you
Bansal.
so much, Puneet. An absolute pleasure. Thank you.